Good morning, good afternoon, and good evening. It's 6:15 p.m., June 1st. We're done with the first half, almost, of the year.
Mhm.
Thursday.
We're on the finish of the second half.
Yeah, start of the second half. So, well, welcome to the latest episode 79, FOMO-ING
To
to AI,
AI.
fear of missing out. Um, Again, this is Mark Yu. Welcome to the Mark Yu and Huawei show.
And this is Wawi Santos, fresh off from work.
Yes. All right, we're both physical therapists here in the US, and we don't have any registered financial licenses, but we do share the passion and interest in investing our hard-earned money in the stock market. So on a weekly basis, we try to record and we take a look at some of the market indicators and fund flows. So off we go. So in this week's Association of Individual Investors, for the sentiment, it is still sub 30%. So in terms of historical average, most of the time we are at 37.5 or higher, but we're still in the high 20s. Um, so for the past month, we have been in that range, low 20s to 29. And in terms of bearishness, a lot less investors are bearish from 41 beginning of the month. Now we're down to 36.8 as of yesterday. So a little bit less bearish, a little bit more bullish. That's the read provided by the AAII. For the fear and greed index, we're actually in greed territory. We're at 68, whereas we're also at greed last week at 62. In terms of market momentum, we are definitely in the bullish side of things. We are ways above the 125-day moving average, which is around 4,030. We're currently at 42.21 as of this afternoon's close.
A lot more risk takers now.
For the put and call options, we're actually uh, bullish. We are at extreme greed. This we haven't seen since February 8th of this year. And not as low as February 8th and back in August of last year. So a lot less people are buying options, put options to cover their um, investments, long trades. Volatility wise, it's also down. So if we're going to take a look, volatility index, just
Wow.
today alone, yeah, just today alone, it's down nearly 13%. And for the past week, it's down nearly 17%, 15 points.
That may be the lowest for the year, don't you think?
Since the start of the year, I think the lowest
Wow.
back in, yeah, you're correct. That's the lowest. The lowest was back on April 28th at 15.78. And right now it's 15.65. So, yep, lowest volatility close since the start of the year. For the Nasdaq volatility, it's down 7.5% just today alone, and it's down 7% for the past 5 days. S&P 500 for the week, it's up 1.57%, and it's up 10% since the start of the year, which is a good sign for long-term bullish investors out there. For the past 5 days, the Nasdaq is up 3%, 13,100. And since the start of the year, it's up 26%. That's amazing. So we're actually peaking right now. Back in August 15th, we have reached 13,128. We're just 28 points behind that. That's the nearest peak within the last year or so. So if we can push through the 13,128 mark, the next resistance probably will be around 14,261 if we still keep rising from here. Um,
Mhm.
discounting any recession that a lot of people are anticipating already. So for the past week, best performing is technology, 7% in the past 5 days alone. I bet Nvidia is still
Yes,
playing a big role on that. Communication services and consumer cyclical. Worst performing is energy. This is the complete inverse, if I may state that, of last year, where energy was the top performing and technology was in the dumpster.
it's like a sector rotation right there, a signal
Totally,
for the week.
yeah, a big sector rotation. And since I started the year, obviously, technology, 32.3%, communication services, 29, worst performing still energy, followed by utilities. So not a lot of people are investing in utilities. I guess they're not seeing any returns despite its dividend capability.
Mhm.
I guess with the ongoing rate hikes by the Federal Reserve, a lot more people are seeing returns or a lot less risk than buying highly in debt companies, utility companies. Rather, they just buy money market or invest in certificate CDs or money market funds. Would you think, Maui?
Yeah, playing most of them are playing it safe, but now I think a lot of the hedge fund managers are buying into this debt ceiling agreement.
Mm-hmm. I think it just passed the House, so hopefully it gets to the president's desk pretty soon. Should it be signed, then a lot less trouble brewing
Yeah,
in the market.
and more certainty for the market.
Yeah, and interestingly, quite a turnaround too on the June 14th Fed rate hike. So if we're gonna take a look at last recording last week, right, Wowie?
That's
Quite a
a big
turnaround.
drop.
Yeah. For so last week it was actually totally inverse. We
Yes,
were seeing a forecast of positive 25 basis point hike last week, but right now a lot more people are looking at that the Fed would probably keep the rates at the same level. This is after a couple of Federal Reserve chairmen and governors came out publicly, I think in a Bloomberg interview, saying that they are considering a pause, but they are not saying that they would stop hiking rates. I think they are still just gonna pause and then possibly hiking rates later on. So this is on the next meeting. This is 13 days from now. But if we're gonna take a look at the next one after that, on July 26th, you could tell it's still a coin toss. 46% are saying no change, 45, 25 basis points, and 8.6% on a 50 basis point hike. So we'll keep tabs on this on a weekly basis, but yep, quite a drastic change for sure, which is interesting. Um, it's not Jerome Powell himself, but
it's
uh,
the other governors,
yeah,
you know.
here we go. It's one of the reasons also why Wall Street or stock market, the volatility index took a massive drop today, and the S&P 500 and Nasdaq all rose. So Wall Street rises on hopes of Fed pausing hikes, debt ceiling deal cheer. So there were a couple of things that the market is celebrating. Nasdaq and S&P 500 as of today surged to 9-month closing highs Thursday, as signs of slowing wage pressure raised hopes that the Federal Reserve will pause hiking interest rates, and investors cheered a vote in Congress to suspend the US debt ceiling. The number of Americans filing new claims for unemployment benefits rose modestly last week, while private payrolls increased more than expected in May, pointing to a still tight labor market that could push the Fed to keep rates elevated. So now we're just gonna watch closely what's going to happen in the unemployment report for May due tomorrow. So quite an interesting turn for sure. And speaking of FOMO, so this is the main idea why we selected that title on this episode. According to Bloomberg, investors are dumping value funds to shovel money into AI bets. So a lot of money are being pulled from value, and they're throwing it into AI bets. 5.8 billion has been withdrawn from smart beta.
Wow.
So are you joining this ride, Wowie, or are you staying on the sidelines?
Well, I'm not staying on the sidelines, but I'm uh, buying more of the lower lower price stocks. So I'm looking at Ribbon and Weave, on the communication side, and of course Shopify is low right now, and insurance companies, financials like Kinsale Group is also at a good price right now. Oh, speaking of AI stuff, everyone's buying NVIDIA probably, but they're not looking into Fortinet.
Mhm.
Fortinet's still performing good, but uh, it's not the popular one right now. But
Oh,
its
wow.
performance is good.
Yeah, it's up 41% since the start of the year. So you know what I'm thinking while we here, honestly, with all the money, which we're gonna take a look at, where the funds are flowing in, with all the money in the sidelines, I think sooner or later they're gonna start looking for higher returns, not just the 4%, 5% that they're getting. Right now, people are, of course, uncertain, and a lot of big banks are forecasting recession.
Mhm.
But if we did commit a soft landing, a lot of people would probably fear of missing out. Not just with AI, but eventually they'll start probably putting that trillions, $31 trillion, or at least part of that, into work again. So,
Yeah, you should.
mhm,
So there should be a bump on that chart when that happens, and then a big dip afterwards when
yeah,
reality sets in.
right. So it's gonna be quite a interesting turn that would possibly happen in the near future, especially after the Fed pause hike or the Fed pause in June.
Hmm.
Oh, this
Yeah.
is
So
uh,
yeah. So to our group members, just watch out for hype. There's a lot of AI hype right now, and just be careful. Look at the valuations and the balance sheet. Make sure you're getting a good value for what you're buying.
yeah. So Fortinet, as you have pointed out, just taking a quick look at its numbers, balance sheet that it has about $2.8 billion in cash, and looking at its debt, oh, just 990 million.
Hmm.
Cash rich company. Its revenue sales have climbed nearly 300 million as of March 31st. That's in the first quarter. And its profit, let's take a look at its profit, 247 compared to 138, almost double of last year, which is always a good sign.
Hmm.
Mm,
So there's some value out there if you just look. Um, you know, I mean, you could look at Nvidia, but it's already, I don't know,
it's at
PE of
all-time highs.
50. Yeah.
Some
Hmm.
say it's a little cheap right now at 40 times forward earnings compared to 70, 60 or 60 or 70 previously, all because of
True.
its projections. Mhm.
True. Could be, right? Looking, 3 years from now, we could all be saying, yeah, it was a good buy.
Yeah,
You know.
hindsight is 2020.
Hmm.
So just be careful with buying all-time high stocks in in and chasing the FOMO. So it's hard. Whenever it reaches its peak, there's no telling. So another one that's trying to chase the FOMO is BlackRock's 9 billion quant ETF, set to lean in on Nvidia and tech. Momentum ETF set to increase exposure to info technology. So this is as of May 25th, about last week. So
Yeah.
maybe trying to chase the already departed, or what do you call it, dispatch train, MTUM.
Well, the information technology did perform well um, last year and this year. Probably from the economic downturn, companies are seeking more information on how to get, you know, uh, get more data about their customers and how to grow their businesses in this down economy.
Yeah, what interests me here is Huawei, despite these companies, investment managers such as BlackRock, if not, it's the largest or second largest fund manager out there, is they can't help themselves but to chase what's already going up. So this is as of May last month, and we have been doing our recording, at least we try weekly basis, and we have been seeing technology outperforming everybody else since the start of the year. But this is the only time during their rebalance that they're gonna chase it.
Mm.
17.7% change
Mm-hmm.
from the 2.9% momentum portfolio that they have. They're gonna change it to 20.6%. That's a lot of money that's gonna flow into infotech right now. And then from energy, the best performing sectors last year and the worst performing sectors since the start of this year, they are just about to just change that from 24 to 5.3%. So if you guys have been invested in Nvidia and big tech companies, congrats to you, because right now, I believe, in my opinion, this single change right here in one of the biggest quant ETFs out there, led by one of the largest fund managers, can set a bottom, I think, on the price right now where it's at, like where the index is at, the Nasdaq, and those companies that like Microsoft, the big caps, mega caps, Microsoft, Meta Platforms, Google, probably because of this.
Mm-hmm.
Yeah, investors' interest and momentum.
Gonna
Yeah.
push their market caps higher,
Mhm.
but that doesn't mean anything if they're not earning.
True. And the investors are actually pulling out of these momentum fund. As of last year, from 12 billion, it's down to a little close to 9 billion. So
That's good.
yeah,
That's still rational.
so they're not really performing. So this is their fund. It's down 4.7%.
Mhm.
So Buffett's theory of just investing in the overall market alone has worked quite well this year. It's up 10% compared to this momentum factor. And now they're trying to do the chase. So that's good news for those who already invested.
Well, what they should be chasing should be energy at its valuations right now because the global market is not yet at full gear, at high gear. Once it goes back to high gear and start producing more, they're gonna need more energy for
True,
production.
true. And you could tell that there's some disappointment coming from China not meeting this and that, and Saudi and Russia trying to tussle things out in terms of their production. But yeah, it could be a long-term play for commodities, especially oil. Meanwhile, the short sellers who are betting against chip stocks, the semiconductors, lose 92% of every dollar bet against it. So those who have shorted the semiconductor industry since the start of the year have a short paper losses in summation of $18 billion. But still, these traders pour 1.4 billion more into shorts. in last 30 days. So they haven't learned their lesson. They still want to keep betting against the bull, the semiconductor bull. So they're upping their bet, especially against Nvidia.
Oh, yeah. Well, I think that may be a good bet right now.
Hmm. So Nvidia, according to Bloomberg, has been the largest source of pain, with mark-to-market losses of $8.6 billion this year, amid the stock's 170% surge.
Mhm.
Woo. The rally also prompted most short covering in the sector in the last 30 days. Short sellers have also covered large positions in Texas Instruments on semiconductor, microchip technology in the last 30 days. So they already gave up covered large positions.
Well, those companies may be up for a correction,
Yeah.
here in a few months.
Well, according to the same article, they're saying in the last 30 days that traders have added nearly 1.4 billion bets, with the largest increase in short selling in AMD, Intel, Marvell Technology, Lattice Semiconductor, Lam Research, Taiwan Semi, Analog Devices. I guess they're afraid of Nvidia right now. a lot, a lot of them got pulled out of their short on Nvidia, more likely. And if we're gonna take a look at AMD, AMD is actually just up 1.9%, 5 days, and it's up 86.6%.
Hmm.
$192 billion company. Well, good luck to them. I don't know. I don't have AMD in my portfolio. Do you have that, Wabi?
I think I liquidated AMD either late last year or early this year. Yes, it was
Yeah,
performing good, so I just took profit.
that's good. Yeah, it's hard to do the short game. Even Michael Burry admitted at one point that he wasn't making any good trades with his calls, shorting the market.
Well, the market is definitely also profit taking. So there's a lot of there's a lot of day trades going on right now
Yeah.
versus long term holds.
Mm-hmm. On to the next. So this is the economic indicators in the US by Yardeni. This was just published today, June 1st. Business cycle indicators. Just a couple of things. So we are still in a negative territory in terms of yield curve, and industrial production is set to hit negative, according to his chart.
Mm,
So this is quite foretelling. Every time the yellow ink or the interest rate starts going up, and every time the green or the industrial production remains negative, it's a sure sign, looks like, that there's going to be recession during
mhm,
that period. And we are close to seeing that. So manufacturing and trading sales too. So usually recession happens when the green is down and the yellow is up. When the green, the manufacturing is down, and the interest rate. So it's always when the spread turns positive or starts curving back up. That's when we start seeing recession. It's not when it's going down. So it's still
mhm.
down right now. So all goes the same to other charts. But yeah, it's an interesting find. Next would be the Federal balance sheet, Federal Reserve balance sheet. So believe it or not, we have actually been sloping down since March 22nd.
Okay.
But the market bounced from here after the panic of the three banks liquidating, going into receivership. But since March 22nd, we've been going down. There's been a lot less money supply moving around, but the stock market has been relentless. It's at highest in the 9 months.
Hmm.
So that's quite interesting. Despite the That's quite a contrary move as far as we have observed. And finally, for the fund flows, this is from Refinitiv, from Reuters. Money market funds and large cap ETFs are main attractors for fund flows. So a lot of money have been going into money market again, $3.8 billion for this week, and another 2.2 billion into stock funds. So could this be the FOMO playing in? Just going to AI. Meanwhile, they are net sellers of conventional funds and also net redeemers of taxable bond funds. 6.7 billion in sell orders. Even in tax exempt fixed income funds experience a lot of selling, 1.3 billion.
Yeah, profit taking.
Could be. But mostly, most of them, the main reason they put their money there is just to earn the, um,
Fixed income.
yeah, fixed income. So they're probably trying to catch the FOMO side of things here.
Hmm.
We're gonna see more of that. Also, which is interesting in terms of fund flows is in Japan. So Japan has seen oops, its highest index in the past 33 years, and Japanese
Yes.
investors are rushing for the exits. So a lot of net sellers in the motherland over there, while foreign investors are excited pouring their money in there.
Yes. Yes. They're calling it the Goldilocks moment right now for Japan.
This is crazy because this is foretelling. If you're just buying into Japan, this is a warning sign. Individuals there and institutions over there are selling. They're going out. They're selling their stock to foreigners at this time. 1.4 billion outflows from individuals and 2.1 billion outflows from institutions, while there are 5 billion going in from foreign money. So
Well, in the
quite interesting.
local local GDP for the US, I just sent you that chart for their estimate for this second quarter is 2%.
Mhm.
They're, expecting a 2% GDP.
So that's positive for the US. So it's
Yeah, which
a
is
recession.
good. Good news.
I don't think NBER will come out with a recession quote. Not even last year when we were calling for one, right, Wowie?
Yeah,
Back in
uh,
August.
it may be 2 years down the road before they say we had a recession last year. Who knows?
So definitely the talk of recession is still ongoing, but the Fed is willing to pause. The money in the sidelines are getting bigger and larger. A lot of people are missing out. They're just piling into money markets. Sooner or later, when the tide turns, because right now the sentiment, according to our weekly survey, is still negative. I mean, it could be extreme greed. A lot less people are buying put options, but it doesn't mean anything. They still need to put their money into work. And if you're gonna miss in the rallies by Apple, which is close to all-time highs, by the way, if I'm not mistaken, I think it's close to all-time highs. 180 an Apple.
Woo!
It's the highest in this year so far.
And it
It's
kept
highest in the past
going up.
year. Highest in the past 12 months. Oh no, it's a new all-time high actually, right? It's a new
It looks
all-time high.
like it, Mark.
179 here, 174,
Another
170.
probably another 52-week high. We'll see. Let me check.
New all-time high probably in the working. So a lot of people are missing
Yes,
out,
yes, it is. It's
right?
another 52-week high for Apple.
Yeah, a lot of people are missing out right now. So It's gonna be FOMO sooner or later. A lot of people will be asking why their portfolios are down. Meanwhile, the average index is up 10%, and Apple of all companies are experiencing way up there returns. So before we end this podcast, I think we're just gonna dive into Dollar General. It's
Dollar
down
General.
30%. I think down 30% right now. Oh, 20% since it came out with its report. A disappointing report looks like. According to Seeking Alpha, Dollar General slides after earnings miss and guidance slash.
Mm-hmm.
So Wall Street was expecting that Dollar General would be reporting an estimate of 3 to 3.5%
Mm-hmm.
or 3.3% consensus. But it just said that it'll just expect full year of 1 to 2%.
Mm-hmm.
Oh, that's quite a miss right there for expectations.
And a punishing blow on its stock price. But it has been performing, that stock price have been performing up and up and up.
Mhm.
And that's what's going to happen to NVIDIA if their earnings and their guidance goes down.
Wow. Yeah, Dollar General is actually down 34% since the start of the year. I wonder how Dollar Tree is. Dollar Tree is down 3% today, down 7%. So if we can take a look at closer look on its numbers, no, I don't have it here. Well, anyways, that's one hell of a miss for it to go down quite a quite a drop. Here we go. Press release. Yeah, there we go. Cash 300 million. Oh no, 300, yeah, 300 million. It's borrowings 250 plus 7 billion plus 9 billion in operating lease. That's a lot of debt right there. A lot of liabilities.
Mm-hmm.
For its net sales, it increased from 8.75 billion to 9.3 billion. Its profit dipped a little bit from 552 million to 514. Not bad, it still registered profits. But yeah, I guess it's the guidance that ultimately killed its stock. But yeah, wow, quite a turnaround. Dollar General hitting the slopes. A lot of FOMO, and despite that, um, Wall Street stock market is just chugging up, going up, staying up there. Alrighty. Well, I guess that does it. Unless any quote for the week, Wowie, before we end the show.
Nothing. I just want to share the thing that I'm addicted right now. That online retail, Temu, where you can get a lot of discounts.
Oh, Timo, yes.
Before, I was thinking that Amazon needs to have a competitor, and there might be they may have found a slight competitor taking out the middleman with Pinduoduo, the owner of Temu. So as far as retail, that might be still an undervalued company right there, PDD,
Pinduoduo.
Pinduoduo.
Well, right now it's up 6% today, and it's down 18% since the start of the year.
Mhm.
And that makes me want to check Alibaba. Alibaba is down 9.7% since the start of the year. Chinese stocks recently, as of February, were hitting the hot streak, but I guess it lost all that momentum since then.
We expect that to bump up here in once China starts its early business cycle.
Right.
it went down before any of the other countries, so it
Mhm.
should be ahead on the early cycle, followed by Europe and USA.
Right. Once it regains its consumer, I guess, because right now they're kind of slow and missing expectations.
Mhm.
Oh well. Well, I guess that does it for this week's episode. Thank you guys if you're still listening to our show at this point. Please hit the like and subscribe button. And
Mhm.
again, this is Mark Yu signing out.
And Wawi Santos, thank you for listening.